Hey everybody, what's up? It's Booksy. Today is Monday, July 25th, and we're going to be talking about the macro diamond bottom and the macro outlook for AMC. There are some things that have changed, and we will highlight those in this video. There's some things that have not changed for the macro outlook. The last time I put out a macro video was the Mother of All Charts video. Obviously, the timing for that was pretty off. In general, though, the principle of that is still intact because we're still using the same concepts, right, that we've been using since the beginning, since this was first kind of drafted in January of this year. And we're taking it a step further, which is that we're starting to examine diamond bottom structures as they appear in these bottoms on AMC. And specifically for AMC, oddly enough, almost all of these structures are diamond structures, and it's pretty unusual, you know? So that being said, we're going to jump right in. And a lot of this comes from Bukowski's diamond bottom analysis, his statistics. There's just a couple of things I want to highlight really quick if you're not familiar with this structure. So number one is it's hard to spot. It's not as common as you might think because it's hard to spot. Number two, when you enter the diamond bottom structure, it begins with a widening spread. When you exit, it ends with a narrowing spread, okay? They're usually made up of two symmetrical halves, and that basically is like a funnel and then a wedge, if you want to think about it that way. They always have sort of a center. They typically will have like a liquid center, meaning like there's a place in the diamond bottom where there's a higher amount of trading going on. Usually have an up thrust and a down thrust that define the top and the bottom of the diamond. There's a couple other little rules here we're going to address today. Number one is that the angle of entry, which is kind of like your trajectory or momentum coming into a diamond bottom, is typically the same going out of a diamond bottom. So if it comes in at a particular angle, it comes out at a particular angle. We're going to find this very, very interesting for AMC today as we talk about it. It's kind of like proof is in the pudding, right? You have to test it out, and it's quite impressive. Let's just put it that way. In addition to that, the price target for a diamond bottom is found by measuring from the largest move, so the bottom to the top of the diamond, and you would find the price target for whatever your exit might be. Jump right in. So I didn't see a diamond bottom here until after we cascaded down and we started forming this region. At that point, it seemed apparent to me there was a diamond bottom. The liquid center at which would be that 1532 range. This is something that's been a fairly strong constant ever since. In doing the macro analysis for this, all I did very simply was I measured the bottom to the top of the diamond. I'm going to use a rectangle so y'all can see it. And when you measure the bottom and the top of the diamond and you run it up from, that's a percentage, right? Because we're on logarithmic charts. You run it up from the liquid center here and you actually get a price target of $52, which was really like, okay, that seems pretty clear that we were going to run all the way up to here. So that was my price target for a long time. I had already had a price target of 52. So in some ways it was sort of a confirmation that that was a good price target. Right? That was a healthy price target. And that's what I've been going with for quite a long time. However, there was some oddities here, things that I noticed that kind of made me feel like maybe that's not the case. Maybe that's not what I should be looking at. Specifically having to do with this area over here, that there's something off about this diamond bottom in that it's skewed. And the more I was trying to illustrate it, the more I realized that we probably had already broken out of the diamond bottom. In which case, we broke out at a much lower target, right? We broke out a much lower range down here. And as a result, you're going to have a lower run up. And essentially, like 38, 39 is kind of like the sweet spot that I found. If you do the actual measurement, it does run up to 44. However, and it's a big however, there was a throwback here. So in some ways, there was more than one. There was almost two, but there was definitely a full throwback right here, which means that you're essentially like taking away a percentage of the move when you do that. And the result of that was the 38.39 price top. So just jumping right in, 38.39 price top, this kind of region right here, 33.62 to 38.39, around September 7th is where I've landed. Now, in order to come to this in a more mathematical way, I want to challenge you to kind of stay with me for the next 15 minutes or so. I'm going to do my best to make this quick, but I do need to hit some really important points specifically on this analysis over here so that you can better understand what I've done in the present time frame. Why are we talking about diamond bottoms anyways? Well, notice that after I saw this diamond bottom right here, I went and investigated and I could see that, yeah, sure enough, this diamond bottom structure seems to exist in a lot of regions, right? Like there's one right here that's really strong diamond bottom structure. There's another one in here, right, on the macro. They're pretty much everywhere. Like they're all over these bottoms. If you know what to look for, they're all over the place. So I was like, well, it seems to me that AMC really likes to have a widened spread and then narrow it and then break out. And specifically this one being like the biggest example in the short term, it needed to be investigated. When I went back and started looking at the diamond structure in the original quote unquote master fractal, I noticed that that structure, if you want to observe here, that structure, let's look at this specific region right here. And you can see that, oopsie, you can see that structure right here is basically identical to this structure that you're seeing presently, like almost perfectly. So what's very odd to me is that when you're looking at a short-term diamond bottom structure, it's one of the reasons why I originally had called out and said, I think we're going to run up to 19. We didn't quite get there. We got to like 1830. I later changed it to like 1809, but that's another story. The point I'm making is that if you want to know where that came from, it's because of this diamond bottom right here, this smaller, more local one, which is, by the way, like a smaller iteration of this larger one, right? Now, all that being said, you might say, well, Booksy, if that's the case, don't you think it's possible that right now we're finishing a much larger diamond bottom and that we might still see that 52? And I would say, yeah, it's possible. However, I actually think the structure for this much larger one finished before the smaller one did. And I'm going to come to that conclusion in a little bit. Anyways, you look at this region, you can see it's very, very similar. And then one thing that's very curious is that what's followed here is a spring action. So you have this diamond bottom in the lower area, and what's followed, it's followed up here by a spring action. If you zoom out, remember, this is just a small version of a much larger bottom, because this is that December fractal, and sure enough, the same thing, right? You see how you have this repetition, right, within itself, that you get this push out and then it kind of coasts back down, finishes the sequence, right? And then springs out. Well, it got me thinking about triangulating springs and how in the past we had used these cross sections to help pinpoint springs, but mostly what we used is this downtrend. And until that downtrend exists, you don't really know where it might go, right? Like back here, you weren't 100% sure, but if you could identify the diamond early enough, you should be able to identify the liquid center, right? So potentially, as long as you have an understanding of diamond bottoms, you might have even seen this as soon as here, right? Where these intersect, you may have been able to estimate that this is actually the final place eventually, right? Where it might come back to, and once it gets back here, you're going to take off. And then of course, once you get these particular markings, you really can sort of narrow in on almost precisely where it's going to take off. Sure enough, this diamond bottom also points to a takeoff point right here. So the intersection of this becomes this very large move. Okay. that all got me to thinking that this should be a way for us to be able to pinpoint where springs are as long as we can find a structure for identifying these diamond bottoms. And I found a simple enough one, which is that you identify the T1, which is this first left fractal, right? And then all you have to do is identify the liquid center, and you basically should be able to start pinpointing, right? Once you get the T1 and T2, which is this area right here, the mountain, you should be able to start pinpointing it. It's that simple. So on the macro scale, can we do that yet? No. Like on the macro scale, all we have is the T1 over here, and you don't actually have the entire T2 fractal yet. So we can't quite do it just yet, but I could say with pretty strong confidence that I think it's going to be this macro downtrend line eventually being hit off in the future. And that seems to be the most likely situation outside of just a cup and handle out here, right? That ignores it. What about the diamond bottom? Why did you come to these new conclusions? How did you do this? Well, this part be pretty simple. I'm just going to walk you through this other example over here. Of all the diamond bottoms that we've experienced, this is the most similar to our current time frame. And what makes this very similar is that it's offset. So by offset, I mean that you have a diamond bottom, right? That's normally like this. And your price target is basically the height of the diamond. And it's usually correlated, by the way, to however far down you've gone. So they'll make it so that the height of the diamond correlates to the price target. Yeah, but it's also typically like from the entry point to the top. Like from the entry point here to the where it dropped is usually about the same as the height of the diamond. So if it were symmetrical, you would come back out and it would look like a really clean bridge sequence, right? But what happens when in the middle of the diamond bottom, they offset it? And how do you then calculate that value, that difference? Well, I went back to this one. I started looking at it and comparing it. And here's essentially what I did. First, I started with this idea that, okay, let's test this concept of angles, entry and exit. All right. So on the current time frame, I know it looks weird. Sometimes it's a little off, but let's do it this way. All right. So 51 degrees, negative 51 degrees. So does the angle of entry match? So what I did is I drew from the top through the bottom, and then I drew from this angle up to the top. So this is where it finally catches the trend. This is where the breakout is. So the exit, right, entry, exit, are the angles the same? Well, these are the exact same angle. They are equal. So we could say confidently, yes, there are some touch points there, and it does seem to respect this trend. So the angle at which it enters is the same as at which it exits. Checkbox. Number 2, does the target accurately reflect the height, right, of the breakout? So like if you were here and this was your target, right? You remember you measure from the top to the bottom. I'm using big things to help illustrate a point here. Yeah, pretty darn close to exactly where the breakout goes to. So yes, that's effective. Had you measured right from the breakout, you would have been a little bit shy, okay? If you had measured from where the throwback happened here, it would have been a little more accurate. So check number 2. Now, check number 3 here is a little different, which is that I needed to find out what happened to the offset value. Why is it that when you start here, you're at 64, but when you end, you're at 52? And the simple way to do this would be to try to figure out like what changed, right? Because remember, we're looking at the change in this value right here, this offset trend. And there's a couple ways you could do it, but all I did very, very simply was I took a percentage, and this best represents a percentage because this is a logarithmic chart. Okay, not a number value, so this represents a percentage. I took this percentage and I moved it down, and I noticed very quickly that basically you can see that the original liquid center, all right, is right here. And you can see that it starts whipsawing around that point. That becomes the liquid center. And then it resets and it creates a lower liquid center down here. Well, the height from the original liquid center to the bottom, where this push down happens, ends up being the offset value almost perfectly, right? So that it creates a percentage difference. In addition to that, if you notice here, the distance from the breakdown, right, where the hook occurs, all the way down to where that first liquid center is, ends up being almost identical to the first part of the run. So there's not only like a symmetry in the break in and the break out motion, but then the offset value, the shifting down of this liquidity zone, the shifting down of the stock price, right, creates an offset in the ultimate price at the end of the stock. Now, you might be thinking, well, I don't know about the math, because you could just take this value, the difference between the two liquidity zones. Why wouldn't you use that to try to find like where does this need to be? I didn't test that because the other works so well, but you can see like it's basically right where the original liquidity zone is for this. So if we're measuring like just liquidity zone to liquidity zone, you could do that. And you could take the measurement on the offset of the liquidity zones, and you can see that if you offset it from this liquidity zone, it gives you the center liquidity, right? Roughly, it gives you the value, okay? I'm sure there's also some fib stuff you can do. I did not do that. So the other thing that I did, and I had to do this, was I had to find centers. And in order to find the center, this midline, in order to verify these angles and everything and see the structure here better, all I did was I drew from the top across and I measured using the measurement tool to find like the center points, right? Not that complicated, okay? And I did it really precisely when I did it the first time. So all that being said, can I apply this to a macro trend? Well, you'll note that the way this happened up here starts with a sequence, goes into a foretop, and then breaks down into this. We actually did the same thing. Okay, we started with this sequence, we ended up with this larger foretop here, and then we broke down into it. And it's basically a mark of like a downtrend. It's happening within a downtrend. So all I did was I went back, I tested it. First, I tested the angle of entry, right? I picked a point. I drew the angle down that matched the angle of entry. Now you'll note that I didn't match it to the bottom here. I matched it to like the center of the liquidity. And sure enough, when you do this and then you match the angle coming out, you can see that immediately you can kind of recognize, okay, this clearly matches the angle, the trajectory. Like it's not even debatable. Like it's perfect. It matches the trajectory coming out of here, of this bottom. So check mark there. Then I looked at this shape structure and I was like, well, is it symmetrical? Because it doesn't immediately look symmetrical. The more you kind of stare at it, the more you realize like, okay, there's like two horns here, right? And there's two horns here, but they look way off. Like this one should be up here. This one should be way up here. They just don't look the same. There's an offset. What do we do with that? The other way to do it is to just sort of look at this structure and this structure. And I don't like bars patterns that much, but I took bars patterns and I just took a bars pattern and I flipped it around just to see, is it symmetrical coming out of here? And yes, it is symmetrical coming out of here. Almost creepily symmetrical, right? Now, I'm not going to say these are one-to-one. They are not one-to-one, but they are very, very close. If the angle coming in and the angle coming out currently match, and these structures are all kind of there, then where did we break out? And how do I figure that out? Well, that's sort of the last big question. Where did we actually break out? Where was this line? And the simple answer is, well, just draw it to this peak, because that's where you drew it over here. All right, and that's what I did. But there's a more complex way to do it, which was simply to, use a fib fan, which immediately doesn't mean, you may think like, well, a pitch fan would not show you exactly where it needs to be, but it actually does. If you drop a vertical from the top here, you can see that it happens to be that this fractal sequencing right here matches this sequencing right here almost perfectly in terms of coming out of this diamond. So we would not be on this trajectory upward unless we had already broken it. The pitch fan kind of verifies to me that it's probably already broken and that now we just need to figure out what the offset is. So all I did was I did an offset value of about 36%. I took that offset value and applied it a couple different ways. So I applied it to the original amount, 36% was $33 from 52. So instead of measuring from the original, which would have been from here to 52, I subtracted the percentage. I took this, moved it up to 52, right? That's all this is. And you get a new target down here of 3362. I also decided to go ahead and try out the offset of 5161. And I did that because there was this other target right here, and this target takes you to 44. And this was the breakout target. But because we have an offset value, right, of a percentage change on this throwback, I did it again, and it was basically 38.39. What's strange about this number is that the point and figure chart for Wyckoff has a breakout target of 39 at like max. So there's no way in my mind like that's a coincidence when the math works out that well. And the 0.5 linear fib, that's like the halfway point, right? The 0.5 linear fib on the macro trend, that's the dollar, whatever it was, $1.92 all the way up to 72.62. That is 37.27. So you're getting this kind of cluster of price targets right in this region. I went back and I was like, all right, forget that. Let's just do diamond targets, and then we'll look at two possibilities, this diamond bottom target and then this diamond bottom target. One is right where the breakout happens. One is where the first throwback happens. And you've got 44 and 41.50. Let's say that you're just going to use that. You're not going to subtract anything from it, no offset values. But you use the percentage change from the second throwback. So this one's really important because this comes right back to the exact place we broke out, which means it's a full-on throwback. So I did that, and I got 3607 and 3421, which is very comparable to the two offset targets. It really just kind of hugs the middle of these two targets anyways. So at this point, I'm very comfortable saying that I really don't think we're going to exceed that value of 39 at the most. I think it's more likely that you're going to hit the 34 and 36. And what's really strange to me about the 34.21 number is that, if you remember, the top of this particular one was what? 34.31. So it's like right underneath it to just a little bit above it. And this particular value right here has historic merit on AMC. If you go back and you look at AMC on the whole, this 34 target region, and even up to like 30, you can see here, up to that 37 region we were just talking about. Really, it's more like 35, but you get what I'm saying? Like this particular area that we mapped out just a minute ago as like the most likely area happens to be a supply zone from the original area of the stock. When AMC goes from one region to the next, it does what every stock does. It takes a supply zone, a place where you previously sold off, right? Previously sold off, and it turns it into a demand zone, a place where you buy and move up. Right now, we're confirming this region down here as a demand zone. We need to confirm this region right here now, right, as a new demand zone, and specifically get over that $34 region. And I don't want to get into it much further than that, but just to say, like, I had found plenty of evidence that this might actually be the new bottom for AMC after we mark up the next time, meaning like that all-time high area, for AMC before the run to 72, right? That becomes like the new low for AMC potentially. The rest of this is just figuring out the rest of the way the fractal works, and we kind of already know what to expect. We know that when you exit a bridge, you usually get two major pullbacks, one here, and then there's often a third towards the top, but it doesn't really count because you're not running up, right? So it's after the fact. You get two major pullbacks on the way up. Now, you might look at this chart and say, well, Booksy, that looks like we've already had one, but this is very small. And I actually think this area right here is probably comparable to this entire region right here. I think we're experiencing this entire smaller version of this in this larger fractal. So I think we're experiencing kind of like one of the major ones, but we're probably going to see two significant ones, maybe three. And I believe it's probably going to be here and then here. So I did that measurement for the breakout point. Remember, it was approximately where the hook comes down to the entry point, or the hook comes down to the original liquid center. And it comes out to be about $27. There's nothing really fancy about this number, and it makes me kind of question it. In addition to that, you can see it's kind of like that support right there. But in addition to that, since we had the throwback, it also makes me wonder if it'll be lower. So I did the throwback value, and when I did the throwback percentage change, it comes to this 2378. This 2378 makes some sense because you can see the macro downtrend right here is roughly where that would be. So it's kind of a ballpark region. I'm going to say like 23 to 25. I don't think at that point you want to come beneath like 19, for instance, but I do believe that more than likely, right? So you get this push up here. You're going to have maybe that pullback. It doesn't have to be huge. And then you get a major up thrust, and then you're going to have to come back and retest this downtrend line. That typically happens every time right here. So after you get this first big push up, this could be very, very big, this next move that we make. So it could go to 27, right? You pull back, I think you're going to hit that downtrend. And then regardless of how it happens, at that point, you only have one more move to make. And I believe that's where you get the final move up. So it looks like it takes a long time because it does take a month. But if the move starts in August, it really takes almost just 1 month, which again, that seems like a really long time. But remember, this took a few weeks, like this took a couple weeks. So it doesn't always seem like it because we're so excited and things are crazy. But the way these stock moves up, it moves up fast. But in a diamond bottom, it also moves out at the speed it comes in. So that's kind of the basis for this. I did a bars count. It also came out to be a similar region. So there's an intersection here of the price targets with this trend, and there's also the bars count behind it. It seems most likely it'll be September before we get there. And if not September, then perhaps late August. But you also note that on the way in, you see how we have those two downward thrusts? It's kind of interesting because on the way out, we're expecting something similar. We're expecting to see two big, 1, 2. So this would be like 1, come up, retest the downtrend, 2, right? Level off. From that point forward, it's really just macro analysis. I did an estimation, which probably you won't like. And it's going to depend on what you believe about the overall stock here. If you think this is too long, and it might be, then you probably won't like what I've done. But all I did was I measured this side of the sequence and basically placed it over here as best I could. There's a couple different ways this could pan out. So number one, I think, is you come up and you get a pretty nasty bleed down to this lower region again, but this time we're on the outside, and this could be your test. And ultimately from here, you could just start marking up. This would leave a lot of up and down room going on. I think a lot of people might not think that this is likely, but this is definitely what we're expecting to see, is like another cat ear sequence over here on the macro. So you have to look at this like one big ear, the second big ear. The other thing that you could look at is possibilities for where the bottom might be. I don't know if the bottom is ever going to be lower than 1611 again. I'm not necessarily suggesting that. In fact, when I looked at this the first time, I was like, I don't think it would ever come back below like 18 again. But in order for it to do that, this region right here would need to be very, very compressed. Meaning like this would have to sort of finish off way over here. So it's almost like, I don't know yet, because I'm not sure how much liquidity they need. And I'm not sure that they would, if they already hit this, that they would ever need to come back lower than here again, right? We do know that in this particular version of the sequence, it did come back and retest that downtrend. And it did ultimately come back to the liquid center. And right now, the highest liquidity zone from this top point down would be right here. The other option is that you get more of like a upside down head and shoulder pattern, in which case this would form a little bit more like the January style right here. And you could see how that would pan out, right? You see that big up thrust, and then you get the big pullback like this, and then you come up into a cup, and then you just kind of leave. It's neither here nor there for me right now. I don't really think it matters too much. I do think that 34 is going to end up being this 33 something, 34 is going to end up being like the new ceiling, and then the wall. And remember, like the floor later, sorry, not the wall. Remember that once you're done with this, you've essentially finished this whole region. And this is all one gigantic accumulation sequence. So especially everything from 33 down to here, like all of this could be used to find an estimated price target. It's going to be a really big push. And if you recall in the Mother of All Charts video, I said maybe November. I still think that's a possibility. So right now I have this mapped out to, all right, more sideways nonsense, and then somewhere in November it pushes down. And we don't know, if it accumulates enough here, if it takes enough time here and accumulates, maybe we don't need to come back, maybe it's a really quick push down just to test it, and then we come back out, and that's the end of it. We set up higher and we're done. This is all speculative out here until I start seeing like how this sets up top. I just know that it's going to look like big cat ears. Like that's the way it always looks, just like it did on this side and like everywhere else on AMC. But the rest of it, pretty speculative. So I'd love to be optimistic. I think it's possible that it doesn't come back down again. I know that this breaks a lot of that trend that you might see. Like if you draw a trend way back, it may respect that trend and it may never push below it. So you might end up getting another, and yeah, this creates, you can see it right there. This actually does create a really complete head and shoulder. So this would be the first shoulder right here, the head, and then another shoulder. The amount of time it took to accumulate this range was 3 months and then about 3 months. So it's reasonable to think that September, right? Month of September, October, and November, you could be in accumulation here, and this could be much shorter. And then November would be the time at which you're pretty much done with this region and you can move on. But I think if it's not November, then it's probably going to be pushing like January or February of next year. And that's just based on, a variety of things, but it's based on what I think is the most likely thing to have happen. So anyways, I'm still holding out. I'm hoping that November it happens. But a lot of it will depend on the velocity of this run, how quickly it comes back down. If it comes down like immediately, we might be in for a buckle up kind of moment, where we're really close, and it could happen by the end of the year. In the short term, if you've made it this far into the video, in the short term, there's definitely a possibility that this breaks down, but it has to go below 1420. If it doesn't go below 1420, it's not distribution. If it drops suddenly below 1420, this region becomes distribution. You would see it make a lower low beneath like 970 something. And at that point, it's bad. But right now, what the expectation is that we come up whipsaw around 1611, ultimately bounce off of that and head on up, as we talked about earlier. So that's it for me today. Hope you enjoyed the video, and I will talk to you all later.